Hello, everybody, and welcome to the Trading with Ashley show. I've got so many exciting things to share with you that will continue to hopefully make you great money if you learn how to do this. But first, I do want to make sure you are subscribed to my channel. I just heard from one of my members that just joined the community that she was able to grow her portfolio by 30% just from watching the free content that I go over with you on YouTube. She actually decided to join the community because she said if she could get 30% by watching my free content, she knows she can outperform even better by being on the inside. And it really is working well for those on the inside. I want to personally congratulate Sheila. She is our newest TWA millionaire. Congratulations, Sheila. We're all celebrating with her. And then someone fresh out of boot camp, Steven, he just had a personal milestone. He crossed over the $100,000 mark in his portfolio. So he joined me in January when he learned how to properly purchase leap call options. They have helped grow his account by over 300%. Now, if you get to that first $100,000, that's when magic happens. You're able to really start selling great puts on some really quality companies that are a little bit higher price. So if you want help getting to that $100,000 mark, please consider joining my community. All right, let's go over what I wanted to share with you today. Now, I have done several videos on how to get free leaps on your favorite stocks. So if you look back over my videos, I've shared this with you on Tesla, on Google, on Robinhood. I want you to know that those free leads that I was able to earn through what I'm about to teach you, they now account for a $35,000 profit collectively. Those trades that I went over on YouTube, I'm already out of the sold puts. Now I have the leaps to run free till 2027, and they're already all profiting by $35,000. This is such an incredible trade hack that if you figure this out and you are able to learn this, you can really grow your wealth by leaps and bounds. So I am going to take you into the computer and I'm going to show you exactly how to build this. Now, we don't know what's going to happen with the government shutdown dynamics. They're saying they may shut down by midnight. If it does shut down, then tomorrow we might see that market pullback. If we do get it, you will be able to execute this trade and get even better prices than I was able to secure today. So this is really good that you're watching this now, and I hope that this helps set you up for an incredible trade tomorrow. You can actually do this trade on several stocks if the stock is ready. So let's talk about that. How do you know a stock is ready for the trade that I am about to share with you? Well, we all know that when you purchase a leaps, it's best to do it when a stock is at a great level of support and when the stock is down. That helps you secure the best possible price for the leaps. We don't want to overpay for a leaps. Even though it goes out really far, you want to get the best possible price. Well, also, when you're selling puts to finance that leaps, well, the best time to do that is when a stock is down in red. Why is that? Well, when a stock starts falling, then the premium to sell the put, it goes up. If you're an option seller, you take advantage of that. And that's exactly what we did today. So what I was able to do today, I was able to purchase a Sofi leaps that goes out to 2027. And then I sold 4 put options to finance the leaps. And on those put options, I actually made those expire in less than a year. That way, I get my hand back on all that cash for different trades, and I let that leaps continue to mature and continue to make money. That's exactly how I was able to create the profit that I'm enjoying now in those other 3 ticker symbols, Tesla, Google, and Hood. All right, now we're jumping into the computer so I can teach you all about getting free leaps on Sofi. Here's the actual trade I called out today for my community members. So I was sharing with them that I went ahead and I purchased one Sofi December 2027 call. That was $12.39. Then to finance that, I actually went much earlier to June of 2026 and I sold 4 put options at the 23 strike. And for that, I received $366 per contract. Well, the beautiful thing about that is I received more for these sold puts than what I had to pay for my purchased leaps. So when I take profit on these, it will have financed this by 100%. And then this has all the way until December of 2027 to continue to gain value. And once I get my money back from the capital being released because of these sold puts, I can do different trades. So this is how I continue to win on these trades. I rinse and repeat the same formula, and I'm using the same cash. It just depends on what is the optimum time for the stock that I want to actually do this trade. Let's go look at the technicals, and I'll show you why this was the perfect time to go ahead and purchase the leaps and also finance it with sold puts. As I was sharing with you earlier, the best time to actually sell a put on a stock is when it's having a down day and it's going towards the bottom of the Bollinger Band. It's also the best time to buy a leaps. So let's see what's happening with SoFi today. Currently, we're at 26.08 at the time of recording. That's down a lot for SoFi. That's down 5.35%. So this was a real good day to look at doing this strategy. So I sold the puts below the Bollinger Band. Why did I go at 23? Well, it's because of this RSI. Anytime the RSI on the 3-month chart is below 50, I like to shoot for the bottom of the band for a fair entry. Also, if I'm going to purchase a leaps, I might wait until it gets to the bottom, but I wanted to go ahead and execute this trade today because I'm unaware of what's going to happen in the future. I just know I'm getting a fair price for the leaps. You don't want to purchase a leaps when the stock is up here because you're going to pay more for it. And if the stock retreats, then it's going to be a losing trade, at least for the amount of time until it goes back up beyond the level that you purchased it at. So it's best to purchase a leaps when a stock is either at the bottom of the band or close to the bottom of the band. So the opportunity was really good today to put this trade on, and now I'm going to show you how to build it yourself if you're able to maybe even get a better price tomorrow than we actually got today. Let's go build it together. Once I get on my option chain, I want to go to December of 2027. So that's right here, December 17th, 2027. And if you remember, I purchased the $20 call option. It's right here. Now, why did I go with the 20? Well, it's this right here. It's the delta. The 0.8 delta is a really good spot if you're buying a longer term option like a leaps option. Because for every dollar that SoFi moves up from the point that I make this purchase, then this option will move by 80 cents. Well, that's pretty good considering if I were to buy 100 shares outright today, I'd have to pay about $26 a share. But for this leaps option, I'm having to pay much less. For the leaps option, I am only having to pay $12.32 a share. That's why leaps are so powerful. So you'd want to buy this one. I'm paying $12.32. I'm going to go ahead and execute that part of the trade. Then next, I'm going to sell the puts to finance this $12.32. I went ahead and made the purchase. You can see it right here. It's the $20 strike, and I ended up paying about $12.45 by the time it got filled. So I paid $1,245 for the $20 leaps call option, and that had the 0.8 delta. Next, I'm going to go look at the trade that will finance this purchase. For this trade, I'm going to June of 2026. Now, I like going much earlier when I am financing my leaps because on the rebound, once SoFi rebounds again, which could be in November, maybe December, then more than likely I'll be able to get out of this trade and free up that cash. If I went as far out as the leaps, which is in 2027, it would take quite a bit of time for me to be able to get out of the trade that is financing the trade. So that's why I like going with an earlier date, and I selected June of 2026, so less than a year from now. Now for that, I am going to this 23 strike, and I am going to receive $3.68 a contract. So it's going to require 4 of these to fully finance the leaps that I just purchased, and actually it'll give me a little bit extra. Okay, here's the trade. You see right here, I am receiving for these 4 sold puts, I am receiving $1,460. That's more than what I actually just paid for the leaps. Now, the reason it's not taking a lot of capital on my end is because I am using margin. This is how you can use margin effectively to help you make purchases like this. So the scenarios I've been giving you, they're looking at using a cash count, but if you use margin, it's even more lucrative. All right, both of those trades filled. Let's go look at them. Here's the one I purchased. This is the leaps. And here are the 4 that I sold. Now, for the trade to work out in my favor, as time moves on, SoFi has to go up. Let's talk about the worst case scenario if this trade goes against me and never recovers. Well, I've got a lot of time on the purchased call, so that's good. It can withstand SoFi pulling down a little. But if SoFi pulls back dramatically, let's say it drops to 15 and it just will not go further, there's something really broken with the stock, then I stand to lose 100% of this $1,245. So that's how that trade would work out if it never recovered. Now, for those of you that have been doing leaps for a while, you know that a 50% stop loss is usually advisable, and that is something that would save me from taking a total loss on this trade. If I go ahead and put in my stop loss to get out of the trade, if I lose 50% of this $1,245. Now let's turn our attention to the sold puts. These puts I agreed to buy SoFi at $23 by June the 18th of 2026. Well, this trade will expire 100% worthless if SoFi is trading above $23 on my expiration date. So that's great because I'd get to keep 100% of this $1,400 that I received in premium. But what if SoFi pulls dramatically below the 23? Let's say it does settle in at that $15 level. Well, now I've got a challenge on my hand because I agreed to buy SoFi at 23. So if I have to take ownership of those shares at 15, then I will be sitting on a loss. Now I will have to wait until the stock recovers to do much with it if I don't want to lock in a loss. And so this only works if you have a high confidence level and then the stock actually behaves like you think it's going to behave and it does go up. It doesn't have to go up immediately, but definitely by your expiration dates, you want it to be above your strike prices for this to be in your favor. Now, if everything goes extremely well and all of our strike prices are safe and this ends up working out in our favor, I'll exit these trades. Usually I'll exit them at anywhere between 50 and 80%. It really just depends on if I need the cash for other trades, then I'll exit. Otherwise, I'll let these just whittle down to close to zero and keep 100% of this. So that really determines whether or not I exit my sold puts early. But let's say that I go ahead and wait for expiration for these. They have financed this purchased leaps option. So as this leaps grows over time, that's 100% in profit. This is exactly how I was able to accomplish what I am sitting on right now, $35,000 in profit on free leaps that I got on Robinhood, Google, and Tesla. Now I will be adding SoFi to the mix. Now, all you have to do is wait. You're prepared. You're ready. Hopefully, you're cashed up for some incredible deals if we get those in the coming weeks. Let's use this potential government shutdown. Unless they come up with an agreement, let's use it to our advantage. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to see one of the videos I did on this subject, I'm going to leave that for you right here.